Hi everyone, and welcome back to ABG's Investor Days. My name is Carl Bokvist, and I'm an equity analyst at ABG. With us now we have Bergman and Beving and CEO Magnus Söderlind, and we will first of all hear a presentation, follow up by some Q&A. So without further ado, Magnus, thank you for joining us, and please, the floor is yours.
Thank you for being here. So let's start. What is Bergman and Beving about? And this was the headline of the leading Swedish business newspaper, Dagens Industri, last year. And then labeled us as the ancestor of stock market rockets. So that's quite a bold statement, and I will come back later on why they chosen to have this headline on Bergman and Beving. But first, what are we doing? So we are actually, let's see now, we should change, So we are actually acquire and develop companies long term. As owner to 21 companies today, we have a long-term perspective on those companies. And we don't buy to sell, we buy to keep. And we don't have any exit horizon on the companies. So we take an industrial approach to the ownership. And we focus on acquiring and developing leading companies within expansive niches. So we have chosen to focus on niche companies and companies then having a leading position in those niches. And our kind of logic for that perspective is that if you are addressing a niche, it's not so big, so many companies want to invest in that niche. And if you then have a leading position in that niche, i.e. be number 1 or 2 in that niche, not so many are interested to outcompete you from that position. And if that niche also have an underlying growth, as a company you can have a good journey based on those market conditions. So that's very important if you look at our companies that they're actually addressing a niche and have a strong position in that niche. Since we are mainly based in the Nordics, or our companies is mainly based in Nordics, we have a focus on productivity, safety and sustainability. And what's a little bit special with the Nordic region compared with, for example, the rest of Europe is that labor cost is quite high in the industry and the construction sector. So the customers here are really interested in finding solutions that make them more productive. And also in terms of safety, the Nordic workplace safety, the Nordic region is typically in the front line in Europe and the Western world. So if you have products that addressing that in a good way, you have good export potential when the rest of the markets is maturing. And that's also in terms of productivity. So we can see if you have a strong position in Nordic with strong products, over time you get a good export potential in those aspects. So going back to the headline in Dagens Industri, first just to give a short history of our company. We actually have more than 100 years of running Bergman and Beving. It was founded back in 1906. And then in 1976 it was listed on the Swedish Stock Exchange. And then over time it was growing. And in the end of the 1990s it was more than 200 companies within Bergman and Beving Group. And the owners then decided to split it up into 3 separate listed companies. And those are still on the Swedish Stock Exchange. One is Lagercrantz and the other one is Addtech. That was then separately listed in 2001. And then over time, Addtech has listed a separate company called AddLife that also is on the Swedish Stock Exchange. And what then was remaining within Bergman and Beving was then called B&B Tools. And between 2001 and 2017, Bergman and Beving was consisting of product companies, wholesaling business and reseller business. And the reseller business was under the label Tools. That is one of the leading brands in the Nordic region within reselling to the industrial and construction sector. And during that period, Bergman and Beving Tools, that was the company, was aiming for a one company approach, i.e. integrating all the way from the products business flow to the reseller. And that was kind of separate to the general DNA of Bergman and Beving, that always has been having a very decentralized approach and not talking about integrating things and having autonomical companies in the group. And over time, they didn't really get the synergies or the effect of this one company approach. So back in 2017, we spun off the reseller part, then called Tools, to build a new group called Momentum Group that was listed in 2017. That is now part of the Alligo Group, and they have also spun off a company called Momentum Industry. So as you can see, over the year of Bergman and Beving, we have created companies with a market cap of roughly 100 billion SEK. So if we then look at what happened then, after the spin-off of Momentum, we had some regrouping to do within the group. We have to strengthen our product companies and the product portfolio, and we lost actually a lot of business volume that was previously gone through the reseller part and the reseller business. But then, since 2020 again, we have built a very, very strong platform and are now have a profit expansion program with the aim of double the profit up until latest fiscal year 25-26, and that turns into 500 million SEK in profit in EBIT profit. And how should we then double our profit and get to the 500 million latest by fiscal year 25-26? We have today a current portfolio of 21 companies, and we see a good potential in increased profitability, earnings, and margins, and also to generate better cash flow in the companies that we own today. And as you can see on the latest quarter, we had a steady improvement, underlying organic improvement in our current portfolio companies. And if we look at all the companies have short and mid and long-term objectives, and we see a great potential in the development in those companies based on the targets we have on those. And we also have, since we have a very decentralized model, we have a company-by-company approach. And that means that we have individual strategies for all the different portfolio companies based on the potential and based on the current performance. Since all companies are operating separately, it's quite few interactions between the companies. But we as a group is supporting the companies in their company development. So we have built a B2B toolbox, that we say, that includes a lot of different tools that we can help the companies to develop in a positive way. And I will come back to that a little bit later on. If we look at new niches that we're interested in, and we're acquired into 2 new niches lately, I will come back to one of the latest acquisitions we made later on today. It's really about acquiring us into new niches. It's not about the current companies to grow into new niches. We really focus on getting establishment and leading position in new niches by acquiring new companies that already have a strong leading position in their niche they are addressing. And we have stepped up the acquisition path during the last fiscal year, and we aim to improve or increase that even further when the cash flow improves. And once again, we buy to keep, so it's not kind of buying to then sell. It's a long-term kind of commitment we have to the companies that we own. If we then look, we have 21 companies in the group today, and they are divided into 3 different divisions that kind of label on the focus area of our group today. So the first division is building material, and this is a company focused mainly on material used within the construction sector. And the second division is workplace safety, and that is then addressing safety issues within the industry and the construction industry. And then the third division is tools and consumables, that having different type of companies having tools and machinery and also consumables in their assortments. And most of those companies based in the Nordic region, even if we have companies in other countries as well. But the Nordic market represents 80% of our sales today. But our product companies, many of those have exports across the world. So we are representative by our companies in more than 25 countries across the world then. As I said earlier, we have a company-to-company approach based on what strategy we expect them to deliver on. And on this picture, you can see two axes. On the horizontal axis, we have a measurement we call profit of working capital. That's a profitability measurement. And we want all our companies to be at least at 45% profit of working capital. And on the vertical axis, we have the profit growth potential. So we look at our company and evaluate how competitive are they in their niche and what is the growth potential in the niche as such, the underlying market. So based on this model, we kind of plot all our companies. And if they are on the right angle, it's really about focusing on profit growth. And they can grow organically, or they can also grow by you're doing add-on acquisitions. And I will bring up some example on that later on. And then on the very left wing, you have red, and that is really, they are not profitable enough. They don't have the profit of working capital even below 25%. And then it's really about focusing on profitability. And it's not about, growing the top line. It's really to get the figures right first before you get into a growth path. And the higher you are on the vertical axis, the more we want them to grow, of course. So we as an owner actually plot all our portfolio companies in this matrix, and that is kind of then deciding what should be the focus that we drive in the board work that we have with our companies. I talked about the toolbox that we have, that we provide to the companies. You can see on the left-hand corner, we talk about direct injection of functional expertise. Many of our companies is around 100, 200, 300 million in turnover, and they don't have expert knowledge in all functional areas. So we have a network of experts, within pricing, within inventory optimization, within export, and so forth. And there we can help the companies driving project initiative to improve their business. We also have the best of two worlds, a small scale and on a large scale basis to the left. For example, we have a logistic company within the group that is then providing services for all the companies that want to have that service. It's kind of providing a big scale logistic operations for many of our smaller companies that make them cost effective. So we have some of those type of functions across the group that the company can use if they like. It's not a demand, but they can then get leverage on having a big scale operation, even if they are quite small as a company. Then we have support for internationalization. As we have subsidiaries in our group in many, many different countries, it's easy for one company to leverage already established daughter companies' infrastructure. We have, for example, a company owning a subsidiary in Benelux, and then just recently another company leveraged that office location, warehouse and so forth locally to get a very easy establishment in that geographical region. So that's also a way that we can support companies to go international in a more cost-effective way. Improve people development and motivation. We have what we call the Bergman and Beving University, where companies can send their employees to improve their skills, but also to leverage and get some relations and contacts across the group. So that's a very appreciated initiative we have. So as you can see, I will not go through all the things that we have in our toolbox, but we have the ambitions, and we also help the company in practice to kind of develop in a positive way and take some benefit of being part of the Bergman and Beving group. I mentioned the profit expansion program that we have since 2020. And this is development we have the last 2 years. It's a CAGR, and this is the EBITDA development. And it's a CAGR of over 20%. And the last quarter, we actually presented 84 million in profit. But on this slide, you see it says 94. And the reason is that one of our companies, Luna Group, their logistic provider had an IT attack. And so they were not able to deliver invoice in the last weeks of that quarter. So we estimate that had quite a big impact on the profit, about 10 million. So the underlying profit was 94 million. And I expect us to be back on this track, profit improvement track, as of this quarter. And the two other divisions, the building material and the workplace safety, had a profit increase of about 20% in this quarter. So the underlying business is having and following the profit expansion plan as we have set. I will just give you some example of the companies that we own for you to get a picture of what we are doing. So this is one company within the building material called SV. The company has a turnover of roughly 1 billion SEK, and have 155 employees, and have an average and a margin, profit margins slightly above average. And you can see on the pies here, it's kind of symbolize what type of improvement opportunity we see in those companies. And as you can see on this, the big improvement opportunity is in the margin. They are actually Nordic market leading within fastening, and we as a group have roughly 7% profit margin now. And that is roughly what they have, but I see a potential to have a double-digit figure in profit margin in this company in the future. And they have some very interesting products. They are really leading within fastening and fixing. And for example, this STEC Max is a screw that is used that have some very unique functionalities that is very appreciated within the professional market. We also own a patent called Nail-in Door that is improving, less waste, much more half the time of assembling, and much fewer material than a normal indoor has. So this is type of innovative product that increase productivity within the construction sector. Another example, this is the workplace safety. This is the Cresta Group. They are leading specialists in safety and height attitude products that you use when you're working in windmills, for example, or on high construction sites. And this is a company where you see have a profit margin well above the group level. And here it's not about improving the profit margin. This is really on the right part of this focus model. It's really about growing the profit, and here we see a great potential. And this company has actually made 4 add-on acquisitions during the last 2 years. So they have both an organic growth, but also acquisition-driven growth. And they are taking, a strong position now with those latest acquisitions in the UK, but also has entered in the US by Abtech Safety and Safety Technology. So this is really a company with great growth opportunities and also have very good profits. To take some examples from the last division, tools and consumables, this is Teng Tools, and they are doing hand tools. We the focus on having outstanding storage solution for tools. This is really for professionals, and they typically have 1,000 tools, and they need to get them organized in a good way. So this is a company really having a strong position in that niche. So less than 1/3 of the revenue here is in the Nordics. So they have, for example, subsidiaries in Australia and UK and Ireland, and they also have business in the US. So this is really a global concept with a global presence. And this has also, as you can see on the slide, a profit margin well above the average, and also a sustainable top-line growth potential with this storage concept. And there are some very good, interesting things going on in this company currently. And lastly, as an example of companies that we own, this is the last acquisition we made. It's a Finnish company called Polar Term. And they are an international leader in powerful mobile heating units. And this is now very popular, unfortunately, I would say, given the oil and gas import kind of restriction that is currently taking place. So this is really very powerful mobile heating units used by engine by diesel, gas, or electricity. And the green one on this picture is actually sold to the US Army. So they have a lot of export in the US as well. And this is a company with a very, very good profit margin, but also with a good profit increase potential. So in summary, we have been working with the business that we are running for more than 100 years, with a proven track record of creating shareholder value of 100 billion SEK. And we have a profit expansion program to double the profit, latest fiscal year 25-26. That's 500 million in profit, which we are on track currently. And the whole company, including myself, is very committed to this plan. And many of us have a lot of skin in the game as well. So I feel very confident that we will be able to deliver on the plan we have set.
Thank you, Magnus. The first question on the growth target and the potential for acquisitions. Do you see any particular area where you see the strongest opportunities or the most opportunities, either be it divisions or countries?
If we look at the two latest platform acquisition we made, they are Finnish companies. And one of the reasons is for that we felt that the multiples in many other countries was kind of escalating. So we felt that we could have good value acquisition in the Finnish market lately. But I kind of see now indication that the multiples is going down in many countries currently, and much fewer buyer nows out in the market.
And then the core of the Bergman and Beving culture about decentralization. How do you balance the autonomy, decentralization with you actually injecting these perhaps focus points in what you suggest the company should do to improve profitability, for example?
I mean, in our decentralized model, the management team always develop the strategies, and they kind of set initial targets. But then, since we are part of all the company boards, we then have a discussion if we think as an owner that the priorities is correct, and also that the target is ambitious enough. But all our companies are aware of this focus model with the two axes, and they know what they could expect from us as an owner in terms of priorities. So I think it's a good balance by we as an owner make sure that we are in line in terms of priorities.
Then we, at least here in Sweden or in the Nordics, we do see some indication of new construction slowing down. Bergman and Beving has a long history of seeing perhaps downturns in the past. I think during the financial crisis you declined something like 20% organically of what it looked like then. But have you seen any weakness as of yet? And how do you prepare your businesses for a potential downturn in mainly new construction?
First, I want to say 60% of our revenue is related to industry. And then less than 40% is to the construction sector. And then if you look at the construction sector, they are mainly affected of a number of employees working in the construction sector because it's mainly consumables. It's not investment products. So now you can read about the downturn in new building, for example. But that doesn't affect our companies, at least not in the next 1 to 2 years. Because the number of employees is still going up in the construction sector. So as a group level, we haven't seen so far any slowdown in the demands. But over time, maybe we get some effect, but that I expect coming later then.
And with that, I think our time is running up. Thank you, everyone who has been listening. This concludes our presentation.
Thank you.